Most oil and gas contractors think insurance is about satisfying contract requirements. The real risk usually appears after a claim, environmental incident, fleet accident, or subcontractor issue exposes a coverage gap no one anticipated. And by then, the financial damage is already unfolding. Oilfield operations create layered exposure, fleet liability, environmental risk, contractual obligations, equipment exposure, subcontractor liability, excess claims. The problem is not whether a contractor has insurance. The problem is whether the structure actually matches operational reality. General liability is foundational, but many contractors assume basic liability coverage solves the problem. It doesn't. Energy service operations often involve multi-party contracts, indemnification agreements, additional insured requirements, and project-specific liability exposure. One poorly structured agreement can push major liability upstream. This is one of the largest hidden gaps in the industry. Many contractors incorrectly assume pollution-related incidents are covered under general liability policies. Often they are not. Fuel spills, chemical releases, contamination events, gradual environmental exposure, transportation-related pollution. These losses can create severe uninsured exposure if pollution liability coverage is not properly structured, especially for environmental contractors, energy logistics operators, tank operations, field service contractors, and hazardous material transport. For oilfield trucking and energy logistics companies, fleet exposure has changed dramatically. Severe accident claims, nuclear verdicts, driver shortages, DOT scrutiny, subcontracted driver exposure. Insurance carriers now evaluate driver quality, fleet oversight, maintenance controls, telematics, and operational discipline more aggressively than ever. The strength of fleet management directly impacts both pricing and insurability. Many contractors underestimate how quickly large losses escalate beyond primary policy limits. One catastrophic trucking claim or environmental incident can create exposure far beyond standard liability structures. That is why excess and umbrella liability coverage has become critical for serious operators. Contractual risk transfer is one of the most overlooked issues in energy operations. Many companies sign agreements without fully understanding how liability shifts through subcontractor relationships, project requirements, and indemnification language. Sophisticated operators review contracts, insurance requirements, additional insured structures, and downstream exposure before projects begin. Most coverage gaps are not discovered during policy renewals. They are discovered after a claim tests the structure. If your operation involves oilfield services, energy logistics, environmental exposure, fleet operations, or industrial contracting, now is the time to review whether your insurance program actually aligns with operational risk. Most energy contractors don't realize where coverage gaps actually exist until a major claim, environmental incident, or contractual dispute exposes them. Montridge Insurance Services specializes in helping oilfield contractors, energy logistics operators, and industrial service companies identify operational risk before it becomes a financial problem. From pollution liability and fleet exposure to subcontractor risk and excess liability structure, we help industrial operators build insurance programs designed around real-world operational exposure, not generic coverage templates. If you want a second look at your current insurance structure before your next renewal, contract, or large project, click the links in the description to schedule a consultation or learn more about our energy services insurance solutions. Thanks for watching.